And trading at the Nigerian Stock Exchange for the year 2018 has closed in the negative territory, with investors recording more loss than gains. It is a reverse for the market, which began the year with positive news for investors. Well, we have been finding out the reasons for the downtrend and what investors should look forward to in 2019. After an impressive 42% growth in 2017, which ranked the market the best in Africa and third best in the world, trading for the year 2018 fell short of investors' expectations at the Nigerian Stock Exchange. The market began the year on a positive note, reaching an all-time high of 16 trillion naira in capitalization and 45,000 points in the all-share index. But it soon began to nosedive, erasing all gains and closing with almost 20% deficit. Currently at 11 trillion, the NSE since January 2018 has lost over 5 trillion naira in market capitalization, with the all-share index crashing by about 14,000 points. With this unimpressive performance, every index in the market closed in the negative territory. The industrial goods sector suffered the worst fate, dropping by over 700 points. Analysts have been explaining the reason for the bearish trend. Some blame it on politics, and others say crude oil prices and regulatory issues are largely responsible for the market's volatility.
The rally you saw in January was more or less like a spillover effect from that, what was already happening in 2017. But as the year went by, in the course of events that were happening, by mid-year, we started seeing issues that had to do with regulatory activities on the markets. So every sanctions coming from companies. The issue again was the political risk. As one trend we've always had in Nigerian stock market is that anytime, every pre-election year, there's always a pressure on the market. From June, we started seeing the pressure, it continued down to November. As of November, the markets that gained 15% in January had lost that amount, and as of 1st of December, the market was down by as much as 20% year to date.
But despite the predominant downtrend, this stockbroker says the market made some degree of improvement in 2018.
However, there were some positive during the year. We had some listing. Some companies came to be listed in the market. We saw offers like Sakol coming to the market, and we also saw within this same review period, we saw a Skybank that was delisted and shareholders lost out completely. At the same time, this same period under review, we saw a merger being approved between Diamond Bank and Access Bank. So in all, I would say the market has been able to weather the storm.
A new trading year is around the corner, but investors' confidence remains largely bruised, and many are unsure of what to expect in the new year. Uzum explains that among other factors, the outcome of the presidential election will be a compass for the markets.
For 2019, what are we expecting? There are three critical issues that will determine how the market will fare. Number one is the politics. In Nigeria, politics is a big game. And the market is about capitalism. If the capitalist wins, the market will dance. But if the incumbent wins, you may not see much reaction from the market. What you see in the market right now, the law in the market may continue. Then another issue, critical issue that will shape 2019 is crude oil price. If crude oil price keeps on going up, keeps on recovering, you will see more investors having confidence in the Nigerian economy.
He also gives investors some tips while recommending equities to invest in the new year.
In 2019, there will be a lot of activity. There will be a lot of activity post-election. Lafarge, for instance, has already started a rights issue, which will run through January 2019. The price is heavily beaten. The right price is at 12 naira, so I see it as a good attraction for investors who are looking at long-term investment.
The volatile session was not limited to the NSE alone. In fact, the three major stock exchanges, the Dow Jones for the US, the FTSE for the UK, and Nikkei for Asia, also experienced massive downtrends, dropping by almost 7,000 points combined. Uzum explains the reason for this.
I think what must have affected them is the state of the global economy and the issues Trump had with several countries, US-China relation in terms of business activities and sanctions, talk of sanctions on Iran, and so those are the major issues that must have affected that affect not just those stocks, but stocks globally. So what will shape 2019 would be how US principally US relationship with other countries.
With the 2019 election just barely 3 months away, analysts insist that the volatility of the market will continue, but they still say that the outcome of the election will play a vital role in determining whether 2019 will be a bearish or bullish dominated market here for investors. Fidelia Aguncha, TV 360 Nigeria.